Welcome to The Next Biggest Winner. I'm Kim Dion. Now, last week you met 9 tech startups who presented their business ideas to PiCap, a $10 million investment fund. Now, only 3 of them made it to today's episode, where they will now get a chance to pitch to our group of 4 powerful angel investors from Maple Leaf Angels. Collectively, the angels have brokered business deals worth hundreds of millions of dollars. Now, let's see how our angels feel about adding our first tech startup into their portfolio.
Hi everyone, I'm Jenny. I'm going to tell you about Trymere Virtual Fitting, which you can see behind me. Even though clothing is a $2 trillion market, only 10% of clothing is bought online. More importantly, 30% of those clothes are returned, according to Goldman Sachs. And 75% of those returns are due to bad fit. A 1% decrease in returns can mean a 1% increase in profit. So we're the only company in the world that has real-time clothing simulation. That means that our computers are constantly calculating how the garments are fitting and behaving. And if you change a measurement, for example, it immediately calculates and streams the result to you. What we do is we take 2-dimensional cat pattern designs, like this one right here. This is a silver jeans pattern. You start with choosing a gender, then you go on to your body shape. So, strawberry, apple, hourglass, all women know what their shape is. And that gives you some default measurements to work with. Then you go into the measurements panel and you play with the different measurements. Start with just 3 or 4 basic ones. Without even doing anything with your avatar, you can start trying on clothes. And what's really cool is you can immediately gauge how these jeans fit with these different tools. For example, this is the normal view. You can see it in transparent mode, so you can see how it drapes around your body. And this is the tension map, which is really important. It will show you where it's tight or loose. So white is where it's loose, yellow is it's just right, red is too tight, and purple is so tight that it's cutting the blood to your circulation.
Can you walk us through very quickly how do you build an audience and then how do you monetize, and how if we put money in, we get our money out?
Right.
Yeah, I'm confused about what the business model is. Have you told us?
Sure. Well, in terms of B2B, there's licensing and commissions. So as you saw here, we have a catalog. We link to websites where you can actually buy it. We just get a straight commission out of that. Or we license it. So we license this widget to e-commerce websites. And we do the same thing with in-store. So people can put it in the store. Imagine this life-size portrait orientation with gesture control and connect cameras, and people are really getting engaged.
So Jenny, you're here to make an ask. Would like to understand what you're looking for, how much of the company you're willing to give up, and what you're going to do with the money.
So we're looking for about $5 million with a pre-money of $10 million, so a third of the company.
Gotcha. So $10 million is a fairly sizable pre-money valuation, and I understand that you are pre-revenue still?
Yes.
So could maybe a little bit more about your patents would be understandable in terms of what justifies a $10 million.
About our patents.
Well, what justifies the $10 million is what I'm really interested in.
Well, if you look at the opportunity and the fact that we're the only company that's getting traction doing it, and really getting an amazing response from customers as in shoppers, we really are cornering the market. ASUS, which has a purely e-commerce brand, makes billions of dollars in profit. If 1% can be added on to that just by lowering returns by 1%, that's, do the math.
Not to start dissecting this, but
let's dissect this.
but let's dissect this. $10 million valuation. So you're pre-money, so you're in beta. How many people are using this? Because we need to come up with some metric that's starting to look at 10 million, because I see nothing here yet that gets me close to half of that.
Well, we're not in beta. It's rolled out, so the website is being used by over 100,000 people right now.
That website is used by 100,000 people.
Yes.
So what's your revenue base today?
So right now, we're getting the word out first. We don't want to, turn people away right away with any kind of money. So that will be monetized. That's not an issue. But right now,
you have 100,000 users.
But let's understand what that 100,000 is. Is that 100,000 daily active users? Is that 100,000 monthly active? 100,000 registered, ever showed up one-time users?
Yes.
Okay, what's the monthly active users, which I think is a much more meaningful metric?
I think it is something like 40,000.
40,000 monthly active.
Again,
Okay.
with no marketing whatsoever.
Yeah,
It's
right.
Absolutely.
Right.
And
So
in terms of clients, we have about a dozen interested brands.
So, but there's this kind of duality in the business model, right? Like there's an online business which you might monetize in one family of ways, and then there's the on-prem business where you are going to be paid by retailers or by brands or by some combination thereof to help drive business for them in a bricks and mortar retail location. And it just seems to me really risky for a relatively early stage company to be pursuing two divergent directions like that. That's just going to pull you apart. It's not going to work. You have to pick one.
I
Like,
understand.
are you as a company prepared to pick one and bet the business on it? Because I think you have to.
We are prepared to.
Which one?
Online.
It's
Because
online.
that's where the future is.
You've got 8 or 10 companies that are interested. Until you get those companies signed, it is probably very difficult to stand behind a $10 million valuation. Because, 30% of the company for $3 million, that is a lot of money
The interesting thing.
to be putting into a company that has no revenue and no signed contracts.
That's a very valid concern. We're working with one of the biggest technology companies in the world that spent the last 5 years trying to develop this technology in-house. Dozens of millions of dollars spent on it. They, just a few months ago, fired that whole team and came to work with us. And we're currently negotiating a paid contract to do that. So as soon as that happens, $10 million will not be the valuation.
Okay.
So Richard, what do you think?
Well, I think a lot of the pieces are there. There is, an exciting product. There is a big vision, maybe too much vision, maybe too many visions, but very interesting. I haven't heard enough that I could commit right now to participate based on a $10 million valuation, but I have heard enough that I'm intrigued and I'd like to continue the conversation.
Great, thank you.
Like Richard, you're in an interesting space. However, at the same time, the valuation is very high. You don't buy companies what the future value is going to be unless there is a cash flow or something that can be measured, and there's nothing that can be measured here. So I'm out.
Okay, thank you.
I would say I'd like to see more traction first, so it's a little too early to look at investing, but I'd like to see more traction.
Great.
Jenny, you present really well, and you've got a passion for your product, which is actually the #1 check mark in terms of having a passionate entrepreneur. I am out, and the reason actually is you should have led with your technology deal. You saved the best for last in a fashion that sort of leaves me questioning why. So unfortunately, for that reason, I'm out.
Okay, thank you. We're going to get the traction that they all commented on. We're, again, very close to signing many contracts, and once we do, there's no stopping us.
Coming up, our second startup will have their last chance in the boardroom.
That opens that vertical.
I don't
So
interrupt,
the
but
business model is partnering.
I feel like I have to interrupt. I have to.
Okay,
I
go
have
ahead.
to. I mean, I hear so many possibilities and partners and opportunities and things you could do. I don't hear a business plan with a degree of commitment behind it.
Ever wish you could take the day off while not having to get time off? Well, these guys say that they can make that happen with a robotic version of you. Yes, we have to see this one to believe it.
Hello, Angels. I'm Steve Sutherland. This is my partner, Dale Wick. The company is Crosswing, based here in the GTA, and this is Virtual Me. The point of telepresence, as a very basic fundamental principle, is no matter where the robot is, you can be there. So let's say you had children at home with a babysitter. You could at any time randomly log into the robot. And Dale, if you just turn the tablet there, he sees you. There's a 360-degree view, which is coming from this dome. This means, as I mentioned, if you want to check on children, or you want to check on your mother or a friend, there's a variety of possible markets. It won't make funny sounds. It will actually, if it can't get over something, it will still keep the pitter-patter. We've been talking with nursing homes and hospitals, and the last thing they want is robots that make funny sounds. But the base is the magic, because on top of that, we could build many different products. So just like the IBM PC defined a new market, and actually arguably the Apple II, what's lacking in the robotics business today is there isn't a standard platform. So we're hoping to launch this as a standard platform.
If an adult responsible for children, has that machine babysitting its kids, is there a problem from a social and legal perspective?
You'd probably still have a babysitter there, but any of
So
those
what
verticals.
is this supposed to do? The babysitter's supposed to look after the kids. I assume this, how much does one of these
Well, you
units
can check
cost?
it. So that's a good question. So that base unit in mass market quantities would sell for $1,000 to $1,500, not including the tablet. But if you think about seniors in Canada, by 2036, 25% of us will be seniors.
Yeah, we're getting old,
So what that means is we can build double, there's 5 million seniors today, there'll be 10 million. The reality is we can start building hospitals, planning them and building them, but there won't be any way to staff them. So people have to live at home longer. So imagine.
So how does this work if I'm upstairs in my home and the robot's downstairs?
You'd actually have to have two in that case. This doesn't go up the stairs, and you won't get a robot in your lifetime that'll go up the stairs because the insurance would be too expensive if it fell down the stairs.
So I'm trying to understand, it's fairly inexpensive to put cameras all throughout your house or in a nursing home. So I'm trying to understand what industry would require that mobility as opposed to just planting cameras?
Cameras in the bedroom, cameras in the bathroom, they're a problem.
I can see two possible sort of business plans that you might be executing on. Number one might be build a business at scale selling telepresence robots, and then later on take the platform and license it out to other people, or maybe build out product line extensions doing other things. Or B, it's really just proof of concept by means of the telepresence robot, and it's the licensing play, it's the platform play. Which of those two things are you doing?
So telepresence could generate some volume so we can drive the cost of the base down.
Right.
And so that's
So you
valuable.
do intend to build the telepresence business to scale?
Yes, but only when we have a key partner as a manufacturing partner that wants to pursue a vertical. So we're talking to some organizations. I had a meeting with Rogers. You can imagine they have their home security, and the problem is, he says, I need about a dozen of these to play with because we tried telepresence once, and we think it could potentially be a challenge for customers to drive. So the first step is to do a short production run where we actually invest in the tooling to build the exoskeleton. That then enables us to go to parties like Rogers and say, yeah, we'll give you a dozen of these. At the same time, hang on for just one second. At the same time, we can broaden our network of universities.
So is this a research project or is this a business? If it is a business, what's the business model? Because if it's only about the portion of the population that can actually afford it, they are the same portion of the population that can afford home care.
But when you talk about who in healthcare, let's say a nursing home. We've had meetings with Chartwell dating way back. In fact, they wrote a sponsorship letter for a U of T project that we did. They have multiple opportunities for a robot like this in their facility. That opens that vertical.
I don't
So the
interrupt,
business model is partnering.
I feel like I have to interrupt. I have to.
Okay, go ahead.
I mean, I hear so many possibilities and partners and opportunities and things you could do. I don't hear a business plan with a degree of commitment behind it. Yes. I don't hear one.
Okay.
Am I missing it, or is it not there?
So when either Apple introduced the Apple II or IBM introduced the IBM PC, IBM didn't come out and say, all of these verticals, we're going to go into.
So I'm a little confused, but notwithstanding, let's get Steve to the crux here. What are you asking for? Where is this going to take the company?
Okay, so we're targeting to raise $15 million for about a third of the company. We're going to do a $2.5 million bridge. So the $2.5 million enables us to make the molds to build this robot in quantity. It won't be the perfect mass production version, but it's one that we could build 1,000 of. And then we would be able to give one to McGill and some other universities who are doing wonderful research in robotics in Canada.
What's the lifeline of this bridge?
That bridge is about a year. It would enable us to build, we have significant funds allocated to building the exoskeleton.
I think the last thing in the world you should do is build 1,000 robots before you know what business you're in. Yeah. I'm out.
There is no business plan that I can see, no focused business plan that I can say I'm with Richard. Can't help you.
So I think it looks pretty cool. It looks very robust. I would suggest that it's maybe time for what we call a pivot, where you look at some other kind of business application for this, because I'm not sure you've got the right application.
I mean, at the end of the day, I think you're a great visionary, have a cool prototype, but it doesn't sound like you have a focus or a market, so for that reason, I'm out.
this is a platform, as the Apple II was as well. So you're actually looking at the future Apple of robotics. Thanks, guys.
I hope
It was
you're
fun.
right.
Thanks. Thanks very
Welcome.
much.
Thank you.
Here goes Moose.
So,
Moose needs a push.
go ahead, Dale.
Well, I sort of figured that would be kind of the concerns that they would have. The last episode we were on, we're a little bit more focused in our message, and I guess it's been a long day.
Finally, our last tech startup will pitch to the angels for a deal that could make them the next biggest winner.
How much money has been invested in this business today?
We have invested a little over $35 million.
That's all capital raised?
Yes, that's friends, families, few people that I owe a lot of favors to.
Our last tech startup will now try for the Angels Millions.
Good evening, everyone. You know, the Internet of Things is suggested to be a $14.4 million opportunity over the next 10 years. We've developed technology that is unique in this space. What I brought with me are passive RFID tags. These are capable of storing enormous amounts of data. Existing technology allows us to read this tag from a field of, say, 5 to 10 feet. The data on this tag can be associated to a particular item, such as a coffee maker, or a woman's blouse, or a baseball glove. At RF Controls, we've developed technology that can read this tag from as far as 100 feet away or more. Now, why is that important? Well, let's think about it. If I can only read a tag from 5 to 10 feet away, I actually have to go to the tag in order to read it. And people do that every day. We have employees that go around carrying handheld readers and they scan a particular area. Well, this is problematic, as you can imagine. We've developed technology that we use to monitor and track, identify, locate, track tags in real time, 24 hours a day, 7 days a week. These antennas are mounted in the ceiling, and we scan those same areas that the handheld can only scan one time.
Can I just ask you a question?
Yes, ma'am.
So what do you do if the tag's not visible? Like
It doesn't
clothing,
matter.
it's not visible.
It's not about line of sight.
Okay.
It's radio waves, so we can actually see a tag through a wall.
Yeah. So let me just get clear on what the technology is. You have got a technology that allows the same Gen 2 RFID tag to be read from 10 times the distance that, tell me if this is true, anybody else on Earth can read it from.
That is correct.
Okay.
Yes.
Is the technology the antenna? Is the technology the signal post-processing? Is the technology something else?
The technology is all the above.
Right. So if the technology is a unique antenna design and unique signal processing to localize the tag, you must have multiple families of patents around that.
Yes, we do actually.
And so
Yeah.
you must have clients lined up.
We do have clients. We have actually some of the Dow 30 companies are clients of ours. It's a very new technology,
So
similar to
what's your sales?
last year we did a little over $1 million in sales. Now, that may not seem like a lot, but 2013 was a pivotal year for our company. It was January 1st of 2013 when we were issued our first patent. Since then, we've received 10 more, including one from China. We went into full production in June of 2013 and began delivering orders in July.
So what are you
August.
projecting this year, 2014, for sales?
We're projecting about 6 million minimum.
Yeah.
That could be significantly more.
And
you're
what's
on
your
track for that?
revenue? What's your revenue model? Like what are you charging each store? What's the cost?
It's
them?
loosely going to be, our goal is to get the cost to $1 per square foot.
Your real business value add is that you can do this with dirt cheap passive tags.
That is correct.
Right? Okay.
Yes. Active tags are very expensive. They can run
Yes.
$40 to $60 a piece. You can't really put an active tag on a Bob Dylan CD as an example.
On every pair of sneakers, yeah.
Exactly.
Right.
And that's the beauty of the passive
Yes.
tags. These are pennies a piece and getting cheaper all the time.
How much money has been invested in this business today?
We have invested a little over $35 million in this technology.
And that's all being raised? That's all capital raised?
Yes, that's friends, families, few people that I owe a lot of favors to.
Like well-placed friends and family.
Yes, well-placed friends and family.
Uh-huh. Yeah, so what's the ask?
We're looking to raise $1.5 million
Okay.
on a $60 million valuation. So recognize it's high for this type of a round. However, it's relative to what the opportunity is.
How long is 1.5 million gonna last you? You already invested 35.
Yeah.
1.5 can't get you very far.
It gets us to where we need to be.
Where's
We're currently,
that in time? Like how many months of working capital does that give you?
well, it gives us 3 months of working capital.
3 months.
Yes.
So you're back to raising capital in the fourth month.
Investors.
And it's important to understand why the number is 1.5 million.
Yeah.
We are currently in discussions with some multi-billion-dollar corporations that are going to provide distribution channels around the world for our technology. So we have a very defined purpose for what we're going to do with this money.
It's really a bridge round.
Yes, it's exactly.
This is a bridge
This is a bridge to this
You've got your
final-
biz dev funnel, and you see many millions of dollars coming in the door in the very near
Yes.
future. And based on the capability you've described, I would think that every software vendor who makes a Fortune 1000 oriented inventory management system must be all over you. That a fair statement?
Well, interesting question. So much has happened in the RFID market over the last decade.
Yeah.
Frankly, there's a lot of skepticism in the marketplace as to whether we can do what it is that we say we can do.
Okay, but that's a matter of just demonstrating
That
it.
is exactly right.
Yeah.
And so we're seeing those changes now. That's what has brought
Okay.
these large players to our table
Okay.
who are looking to partner with us.
Wow.
I got to tell you, I mean, I have to say, Todd, very interesting technology. Your story is fascinating, but I got to tell you, raising 1.5 million when you've got 35 million raised and it's 3 months of runway, something does not fit for me, so I'm out.
Perfect.
It sounds like three months is too short a time. It sounds like if you need 1.5 for 3 months, you need to raise more than that. And I'm out.
After we got through a proper validation of the business model and we seen what you had was real, then I think we would have to start talking about the term of the working capital at that point in time. But your technology is interesting, and I'd be very interested in seeing the validation of that business model.
And we can certainly do that. We have price validation in the market from one of the Dow 30 stocks. We have performance validation in the market. So perfect. Thank you very much.
I love GWiz technologies. I love them extra much if they are unique in the world and potentially as disruptive as this. I think the funding strategy doesn't make sense. Like to raise a bridge round that only covers 3 months, I think is crazy risky. If that is something you'd be willing to look at a different way, then we could continue the conversation. Otherwise, I'd have to be out. Yes, sir.
Well, thank you all very much. Well, I think they're very informative, interesting, their take on it. Somewhat short-sighted on some of the ones who think we should raise more capital. I'm intimately familiar with this business. I've got a pretty good idea as to how much capital we need.
Well, that's our show. Thanks to all our presenting companies and investor panels. And from all of us on the next biggest winner, thanks for watching. I'm Kim Dion. Good night.
Is there a problem from a social and legal perspective?
Based on the capability you've described, I would think that every software vendor must be all over you. Is that a fair statement?
Well, interesting question.